Breaking. U.S. job market crashes. What this means for your career in 2025. The labor market has hit a wall, and experts are weighing in on what this means for the economy and your job. The disappointing July employment report suggests that the job market is struggling due to the uncertainty of on-again, off-again tariffs. Not only did employers hire fewer people than expected last month, but the government also revised its jobs data sharply downward for the prior 2 months. With the revisions, the U.S. added only 19,000 jobs in May and 14,000 in June, reflecting paltry employment growth during those months, according to a research note from EY Parthenon chief economist Gregory Dacko. The latest jobs data sheds new light on the U.S. economy as businesses absorb a multitude of changes, from President Trump's trade deals and fresh tariffs to the new GOP tax law. The jobs data backs up anecdotal evidence from the Federal Reserve's most recent Beige Book that many companies are delaying hiring until uncertainty diminishes. Laura Ulrich, Indeed's Director of Economic Research for North America and a former official at the Federal Reserve Bank of Richmond, told CBS Money Watch, "Based on what I was hearing from a lot of employers, I kept expecting to see a stagnant jobs report at some point. That's what we got today." While the labor market isn't seeing massive layoffs, companies also aren't expanding their hiring plans, making it difficult for unemployed workers to find new jobs. The number of people searching for work for more than 27 weeks jumped 11% to 1.8 million last month, compared with a year earlier, government data shows. There were pockets of strength in the jobs report, with healthcare and social assistance adding a combined 73,300 jobs last month. But many major U.S. employment sectors saw little or no hiring, while others saw job losses last month. President Trump claimed without evidence that the jobs report was manipulated for political purposes and fired Bureau of Labor Statistics Commissioner Erica McIntyre. He also asserted that the downward revisions were a major mistake, although the BLS revises its data each month to reflect new information, and the numbers frequently move both up and down. Heidi Shearholes, the president of the left-leaning Economic Policy Institute and a former chief economist at the Department of Labor, noted that these data are the product of careful work by hundreds of expert economists, statisticians, and civil servants following transparent, well-established methodologies. Businesses have been expressing hesitation given the uncertain impact of Trump's tariffs. Federal Reserve Bank of Cleveland President Beth Hammack said, "I'm hearing that uncertainty has really been weighing on businesses. They've been having a tough time deciding when to invest, how much to invest. Many of them have scaled back plans for investment." Some Trump officials portrayed the jobs report as a temporary setback, as the administration seeks to revive American jobs through its trade policies. The U.S. lost 11,000 manufacturing jobs in July, and the revisions for May and June also show that the sector shed workers during those months. That's notable given Mr. Trump's promise to revive manufacturing jobs, which has led to new agreements from the likes of Johnson & Johnson and Apple to build new plants in the U.S. But the Trump administration's tariffs have added to the challenges facing the manufacturing sector, especially those producing durable goods such as appliances and automobiles. It's possible that manufacturing jobs could reverse the trend now that the Trump administration's tariffs and tax policies are settled. But progress on the goal of reshoring American manufacturing jobs may take years, given the cost and time required to build new factories. Heather Long, chief economist at Navy Federal Credit Union, said, "This is not a healthy job market. The economy needs certainty soon on tariffs. The longer this tariff whiplash lasts, the more likely this weak hiring environment turns into layoffs." U.S. labor market cracks widen as job growth hits stall speed. The U.S. labor market is showing unmistakable signs of strain, and the latest numbers have set off alarm bells for economists, policymakers, and everyday Americans alike. If you thought the job market was on solid ground, think again. But here's where it gets controversial. Some say these cracks are the direct result of recent political decisions, while others argue it's just part of a natural economic cycle. So, what's really happening beneath the surface? Let's break it down. In July, the U.S. economy added just 73,000 non-farm jobs, a figure that fell far short of expectations and marks one of the slowest months for job growth in nearly 5 years. Even more concerning, the government revised its job growth estimates for May and June downward by a staggering 258,000 positions. That's not just a minor adjustment. It's a major red flag that the labor market's momentum is faltering. The unemployment rate also ticked up, rising to 4.2% from 4.1% in June. This increase came as the number of people employed in households dropped, signaling that more Americans are struggling to find work. For months, the labor market's resilience has been a key pillar supporting the broader economy, even as it faced headwinds from President Donald Trump's aggressive trade and immigration policies. But now, that foundation appears to be weakening. And this is the part most people miss. The impact of import tariffs is starting to ripple through the economy, pushing up prices and raising the specter of stagflation, a dreaded scenario where growth stalls but inflation remains high. U.S. economy slowing. July jobs report sparks recession fears. The latest U.S. jobs report has sparked significant concerns, revealing a slowdown in economic growth that many experts believe could signal the onset of a recession. Despite expectations of a modest job gain, the economy added just 73,000 jobs in July, marking a substantial drop from previous months and raising alarm bells among economists and policymakers alike. This data point, coupled with downward revisions to previous months' figures, indicates that the U.S. labor market is weakening more rapidly than anticipated. The 3-month average job growth now stands at a mere 35,000, a fraction of the rate seen a year ago. This slowdown is particularly concerning as the labor market is often considered a leading indicator of broader economic health. Luke Tilley, chief economist at Wilmington Trust, notes, "We are in a broad economic slowdown. Whether it translates to a recession or not is the question that I'm asking now." Tilley points to factors such as the lingering impact of tariffs and potential pressure on consumer spending as key contributors to the current economic climate. While the overall GDP for the second quarter showed a 3% annualized growth, this figure masks underlying weaknesses. Consumer spending, a critical driver of the economy, grew by just 1% in the first half of the year. Additionally, the recent surge in import costs, partly due to tariffs, has further strained economic growth. Goldman Sachs forecasts a slowdown in growth for the final 2 quarters of the year, citing weaker consumer spending, higher inflation, and reductions in government transfers. The firm's analysis aligns with the broader consensus that the U.S. economy is facing significant headwinds. Despite these challenges, White House officials remain optimistic about the economy's future, pointing to the recent passage of the One Big Beautiful Bill Act as a catalyst for future growth. However, the skepticism among